Hi folks, welcome back to the second part of this video, which is going to be looking at preparing financial statements for 2019 and 2020. The reason I've picked these 2 years in particular is that you'll recall from our question that it was in 2020, early in that year, that we actually sold the fair value through OCI investment. So I wanted to compare what the statements would look like in that year once we had sold the investment with what they looked like the previous year, 2019. So let's begin. We know in our question that we are preparing statements assuming that we would be reclassifying any unrealized gains and losses through retained earnings. So with that in mind, we're going to first do the statement of comprehensive income. Well, don't forget, comprehensive income has two pieces: any net income from the income statement when you did your statement of income, and any other comprehensive income. So I'm assuming here that our net income was $100,000 in 2019. So that's assumed on my part so that we could do a fuller statement. Now what happened to OCI this year? Let's look at everything that went into OCI only in 2019. Now you'll remember that we had a $4,200 gain that we booked because the investment went from $32,200 at the end of 2018 to $36,400 at the end of 2019. If you don't remember that, let's scroll back up to Part A. You remember here, our investment at the end of 2018 was sitting at $32,200. We know that at the end of 2019, it should be sitting at $36,400. So we recorded an unrealized gain. That $4,200 found its way into the statement of comprehensive income through OCI in that year. So if we scroll back down to the statement of comprehensive income, we have that there. Normally we would deduct anything that gets reclassified to retained earnings, but we have nothing. Don't forget, the only time you would reclassify anything to retained earnings when you're dealing with fair value through OCI equity investments is when any of those equity investments that are deemed to be fair value through OCI are sold. We didn't have any sale of such investments in 2019, so we didn't reclassify anything. So that $4,200 gain is the only thing that going into OCI, so our comprehensive income is $104,200. On our statement of financial position in the long-term investment side, don't forget we adjusted the fair value through OCI investment to $36,400, so it sits there at that balance in our statement of financial position. However, what's our balance in the shareholders' equity section for AOCI? Well, if you go back to Part B, that's part of what that was supposed to do, right? If we look at what we said in Part B, and all the parts, we said AOCI balance at any point in time would be the difference between fair value and original cost. Well, the original cost was $39,900, right? At the end, the original cost, that was the original fair value at the date we bought the investments, but the investments are only sitting at $36,400. So we know that AOCI should be a debit balance of $3,500, right? And that makes sense. Why? Because if we look down here, we put it in at that because we've done Part B, but how do we know what is that? Well, don't forget, your AOCI at the end of 2018, which would be the same as the beginning of 2019, was a debit balance of $7,700. How do we know that? Well, if you go back up here, we said that the difference between the original fair value, which was our original cost, and the fair value of the investment at the end of 2018 was a debit balance of $7,700. We also proved that here as we were tracking through all of the adjustments to AOCI, right? Or to OCI here. We started off with $1,850, right? We debited it by $95.50. When did we do that? When we recorded our unrealized gain here, right? So we know at net, we would have had at the end of 2018, after we posted this adjustment, we would have had a balance of negative $7,700, right? So that would have been our ending balance of AOCI at the end of 2018, which is the same to open 2019 because it's a balance sheet account or statement of financial position account. It's not going to close. So what did we do with it that year? Don't forget, we added some OCI to it. That's the OCI that's here, right? I'll just highlight that in purple so that it kind of matches what's below, right? We got a purple guy here, got a purple guy in here, right? So that's where it's coming from. Whatever was in your OCI now in 2019 updates your OCI balance, your AOCI balance in 2019. So if we started off with a debit balance of $7,700 and we're adjusting it further because we recorded OCI of $4,200 gain in 2019, that OCI amount updates your AOCI. So now we will have a negative or a debit balance of $3,500 in it. What happens in 2020? Well, if you'll remember, this is the year that we sold the investment. And we sold that investment for $38,000. So in the statement of comprehensive income, again, I'm just assuming, just to have a number, that our income in 2020 was $100,000. What did we put into OCI this year? We put in an unrealized gain of $1,600. Where did that come from? Don't forget, in 2020, we didn't do any year-end adjustments at December 31st, 2020 because we sold the fair value through OCI investment much earlier than that. We sold it in February 2020. So the only unrealized gain we would have booked or anything we would have booked into OCI would have been that step 1 adjustment. So let's go back and find that guy. Here it is right here. Into OCI, you put the $1,600 step 1 adjustment, which adjusted the investment to its fair value just before you sold it in step 2. So that little guy is right here. There's your $1,600. So we'll just put that in green too. All right, do that here, right? So it matches your entry. Matches your entry. And then in this case, though, we did have an unrealized loss in this case that we were reclassifying to retained earnings. And we said the loss was a $1,900 loss, hence the bracket. Why was it a loss? Well, if you'll remember, cumulatively, we know that we were selling this investment for $38,000, right, in Part C, right? But our original fair value was $39,900. That's our original cost. So the difference between the $38,000 that we sold it for, which was the fair value at the date of sale, and the original fair value or original cost means that's the cumulative unrealized loss, because we're selling an investment for $38,000, which originally cost us when we bought it $39,900. So that's an unrealized loss. That cumulative unrealized loss is now going to be reclassified to retained earnings. So to take it out of the loss, which is a debit, we have to credit it. It removes it from the loss and reclassifies it into retained earnings. So less the loss that we're reclassifying out of OCI, less, which is a minus, less a loss, it's minus a minus, which is a plus. So when we deduct this loss, we deduct $1,900, we're going to have $1,600 minus the loss of $1,900, which is minus a minus, so we get $3,500. So our comprehensive income here is $1,035. Notice that by the time we get to the end of 2020, our fair value through OCI investments are zero because we sold them. We sold them for $38,000. We should have no more AOCI left in shareholders' equity related to these fair value through OCI equity investments. Why is that? For the reason we said earlier in this question. Once you get rid of the investment, you should have no AOCI associated with that investment. It should all be transferred or reclassified. Any of those cumulative gains or losses, in our case a loss, would have been reclassified to retained earnings. So you should have nothing in AOCI, right? Remember we said in class 2, one of the reasons, or one of the things we've already learned in previous courses, is that, say for fixed assets, when you sell a building, One of the first things you do is you get rid of the accumulated depreciation on that building because you no longer have it. Same thing with the fair value through OCI investment. You should not be keeping any unrealized gains or losses that have been building up on an OCI investment when you sell the investment. You get rid of it. That's what the reclassification piece is about. It's getting it out of your cumulative unrealized gains or losses and slipping it into retained earnings. And that's exactly what we're doing here. So we started off at the beginning of 2020 with the AOCI balance at the end of 2019, which was negative $3,500 or a debit of $3,500. But what OCI did we book during 2020? Well, there it is right here. It's the $1,600 gain that we booked less the loss. When you take out a loss, you make it bigger by $1,900. So that gives us $3,500. So this is the amount of OCI in 2020 that updates your AOCI balance. Therefore, the debit balance plus the credit balance in OCI for 2020 leaves you with, that should be 2020, it should leave you with a balance in AOCI at the end of 2020 of 0. So this completes our review of the financial statements associated with fair value through OCI investments. I hope you found it helpful.